REITs. They are often viewed as bond-like investments, but why, when a Fed hike is looming, are they fetching such mega high prices of late? Well, Frederic Guibaud is in the studio. He's going to tell us more. Frederic, welcome.
Thank you.
Now, why do you think these type of assets are fetching such a high price? Why are people looking at them now? Why would you say?
I think we have to differentiate between the US, where the Fed will probably hike rates pretty soon, and Europe, where we face exactly the opposite situation. Rates will probably be low for quite a while. Therefore, we believe that in Europe, European REITs make a lot of sense because we still see high yield gaps, which is the difference between the financing cost and the underlying yield of the property itself. We see high dividend yields still. Valuations are still in line, I would say. And this is something which is often overlooked. In REITs or in real estate, you have basically a free option, a free protection against inflation. Nobody talks about inflation today, but it will come back. And when it does, people will be looking for solutions. And in real estate, you have this inbuilt, and it's not priced in by the market today at all.
Okay. Now, what do you think about the sort of loan to value ratio and in different price valuations kind of moving forward? What can you really tell us about that, please, Frederic?
Well, loan to values have been at their peak during the crisis 2007, 2008, 2009. Ever since, they have come down, which is also due to the fact that property values have been rising. But also there has been some deleveraging taking place. So because financing costs are low, and they will still be low or will remain low for quite a while, this is also an attractive trend, actually. And real estate in itself is a very, I would say, very stable, very transparent investment. If you have a good piece of real estate or good portfolio, to model the cash flows and therefore to value it is not as difficult as you would with let's say, a cyclical company.
Okay. Now, you mentioned sort of some of the different things you have to look out for, that they're stable and all that. But what about in terms of risks in this kind of asset and about investing in REITs, and how can consumers really mitigate these risks?
Well, I would say the biggest risk today is not to be invested. We believe that an investor should always have some allocation to REITs because they are actually an efficient asset class in terms of risk return. They are more efficient than equities or more efficient even than real estate itself. So they are kind of best of both worlds. And I remember we did a roadshow in October 2013, I remember that. We presented our investment solutions and people were very skeptical. They said, yeah, we will wait the next correction and then we step in, but they're still waiting and they have missed over 50%. So we believe that, with interest rates being low and at the same time the European economy picking up, that's actually a sweet spot. And concerning mitigating the risk itself, we believe that active management plays a key role. So at Petercam, we are an active manager. That means we also manage risk actively, and we can play the different European markets. That's the beauty about Europe. Every market is different. You have different laws, you have different currencies sometimes, you have different underlying economic dynamics, and there are a lot of opportunities to be active and to add value through active management.
It does seem as though it's not the thing to wait and see, but to actually get in there.
Yeah, at least, maybe not overweight today. That I think we would not suggest. But I think many people have overlooked the asset class completely, are not invested at all, and we believe one should always have a portion of the wealth or of the assets invested in this asset class.
Fantastic. Well, Frederic, thank you so much for coming in and sharing your insights with us. It's been an absolute pleasure.
Thank you, Monica.
Okay, well, that's all from Frederic and myself for the moment, but there's plenty more on Dukascopy TV for you to check out, so please do keep clicking back. Bye for now.